Good afternoon, traders. This is Christian from Tribeca Trade Group, and it is the end of the week. Congrats, everybody. You made it to the end of the week, Friday, January 29th. Also, the end of the month. So, risk disclaimer first thing here, everything that we're going through is for information purposes only, not giving out any recommendations or advice. This is for educational purposes only. Number one, I think, if you made it through this week, okay. If you ended up positive for the week or down a little bit of money, I think you did a pretty good job. This was not an easy market to trade this week. January, by the way, which we'll talk about January performance, but the S&P finished down for the month, right? Who would have thought a couple weeks ago that this would be the cause of a market or a contributing factor to what happened this week in the market, right? Short squeezes, brokerage issues, you name it this week. One of the questions that I always get from members is, what do you think is going to happen tomorrow? Or what do you think is going to happen next week? I'll tell you, I could have never predicted this in 100 years to some of the things that we saw this week. So it always goes back to, for me, trade your rules, price. I look at the VIX. I look at indicators under the hood. Ultimately, price and trend are number one for me. That's most important. But we certainly got some hints over the last 2 weeks that there were some cracks emerging, and these are short-term issues, in my opinion. These are not long-term structural issues, but we know how the market goes, right? It goes up and it goes down. It goes up and it goes down. Over time, theoretically, it goes up, but it ebbs and it flows. So you have to be prepared a little bit for market volatility when it does come at you and how you're going to adjust to that. The one comment, I want to be really positive in this video or try to remain positive. I gave what I refer to as a market rant earlier today about some of the situations going on. If you're not a member of the Tribeca Trade Group, you can email me, and I'm happy to provide that to you. But there's a lot of things going on right now, and some of which you can control and some of which you can't control. What can you control? Well, you can control how you're going to adjust to this market and the decisions that you're going to make. You cannot control the markets being fair to you. Everybody wants a fair market, right? Everybody wants to be able to participate and trade and do what they want to do in a fair market. However, that's not always the situation, right? In my plus 20 years of trading, there's been many times over the years where the market has not been fair to me. I am not going to go on a message board and complain about it and cause issues. I'm going to make adjustments and make sure that I have the right tools in place and the right strategy to take advantage or be defensive. All right, so that's the main thing. But I would say overall, take a deep breath, relax this weekend. I think this market needs a breather. I think emotions were running very high this week. Normally, how you want to be trading is you want to be very calm, right? And you don't want to get emotional. When you're emotional, you make bad decisions. I was on Bloomberg TV earlier, and their segments are very quick. Sometimes they only have 2 minutes, right? And I did not get a chance to express everything that I wanted to say because there's a time limit. That's not fair. No, I'm just kidding. But one of the, some of the things that I was saying is that you really, in my opinion, have to adjust to what the market is giving you. Was very frustrated this week that trading systems were going down all over the place, right? Multiple trading systems, multiple order entry, some quotes were wrong. Sometimes it's best to kind of walk away. I can't control that happening. Am I going to get mad at the brokerage systems because they're experiencing unprecedented volume? No. I'm going to make the adjustments that I need to do, right? And if that's a toxic environment to trade in, then the adjustments are trade less size and trade less. That is what it is. The other thing is, I I would say that usually when I go on Bloomberg, they always ask, they ask for a trade idea. I did not give one because of the state of the market that we're currently in. So let's talk about that. And I will come back to some of the numbers for the day. I usually go over it. Look, you know what? Why don't we go over the numbers first? SPY finished down 2% for the day. Qs finished down 2% for the day. IWM finished down 1.5% for the day. Bonds, interesting, also finished down for the day. There was no major bid in the bonds. However, the VIX was all over the place. I think the VIX hit a 37 and closed around 33. So to me, that's not out of the woods. I talk about the VIX a lot when it's doing something, right? And this week it's doing something. So what do we have? Like I don't love to analyze the technicals in the VIX. Remember what the VIX is. It measures short-term volatility in the S&P, right? Just in the S&P stocks. That's it, right? So if you're looking for the VIX to do something else, it's not. It is what it is. It measures short-term implied volatility, right? Monthly options, go out 30 days, in the S&P, right? So when the VIX is going up, that means that the S&P options are implying more currently that there's more volatility, higher volatility, right? When there's higher volatility, usually the market is going down. Usually, not 100% of the time, but usually, right? So the more volatility that the market is pricing in, that means that the market is moving faster. And again, it usually means it's moving faster to the downside. Why? Because it's normally stairs up and elevator down. That's just how it works, right? So what do we have here in the VIX, right? Number one, we're above 30, so that's indicating much higher volatility than what we saw a couple weeks ago, right? I think you can make that fair assumption. Number two, we have 2 inside days, so the prevailing trend right now is higher. Now, previously, we've seen a bunch of these, right? We saw one in June. We saw one in September. We saw one in at the end of October, beginning of November. Every one of these that they've happened since this big sucker has been just what I refer to as a bout of volatility, right? A short-term move up in volatility, and then it wanes. If I had to guess, I think that's what we might be having too, but I'm guessing, right? I don't have confirmation of that, and what I would look for is a move back below 30 to begin with. Even better, a move back below 25, right? So that's what I'm looking for. We don't have that yet, and until that happens, I remain defensive. That's it. So the VIX is one piece of the puzzle, right? What else don't I like right now? I don't like what's been going on with market breadth, right? The way that I deal with this, right, or the way that I analyze this, right, and I've talked about this all week, so I know this is a little bit of a repeat of what I've talked about, but this is market breadth, advancing versus declining issues. When this is expanding, right, to me, that means the wind's at my back, a little bit more risk on. When this is declining, and I've got the 10-day moving average as a little bit of just help with this, but when the signal line, right, the McClellan Summation Index is below the moving average, there are more names that are declining versus advancing, right? So I view that as the wind is in your face, and that to me tells me to try to be more defensive. Try is the major thing. All right, so that's a little bit of the VIX, market volatility. I mentioned price and trend are most important to me. What is that telling us? Well, what did I say the level to watch in yesterday's video was? Right, it was, whoops, I don't have, hold on. Let's set this up correctly. 3704, because I forgot what the level was, right? We closed above there. We closed below there. And we also closed below the 50-day moving average. So that to me is a short-term warning sign. Look at also the moving average crossover, right? The 5 closing below the 20, right? This tells me to have less risk on in this, in terms of technical signals, right? So an MAD, I'm sorry, moving average. It's been a long week. Moving average bearish crossover, right? 5 going below the 20, and price going below the 50-day moving average tells me to be more conservative and more defensive until we see price stay back above and see buyers come back in. Also, notice the volume, right? Big volume occurs on down days. Big volume does not occur in the indices on up days, right? You want to see low volume in the indices, right? If you don't believe me, take a look at most of these market swings. It's low volume. The lower the volume, almost the better in the indices. Because in the indices, or either S&P futures, which is what I have up here, or the ETFs, the high volume happens on market turns, right? So take a look at here, high volume, right, for the indices. Single stocks are a little bit different. People like to see volume accompany like a breakout in a single stock. But for the indices, big volume happens on market turns, and usually to the downside, right? So we've got big distribution going on right now. All right, so that is the analysis that I have, and this is why I did not give a trade recommendation on Bloomberg. Not because I just didn't want to give one, but I'm waiting. You have to be in trading. I know this is very different than what is going on in message board area, but patience is what pays off in trading. I know that's not the current situation that is taking place in those arenas, but for me, as someone who's been trading for a long time, and who's trading, listen, what I tried to do is beat performance of the indices, the benchmarks as hedge funds, but do it the right way and do it in a fair way. I'm not colluding with anybody, to try to do that, right? So really haven't had to really talk about this in any of these videos, but as I've said this week, 2 wrongs do not make a right. Okay, so I'm being right here, fair and so on and so forth. My job is not to try to put anybody out of business. My job is to trade the correct way and try to outperform the indices. That's why you're able to sleep at night. Those are some of the things that I'm watching next week. I want to see an improvement in breadth. I want to see the VIX get below 30. 25 would be better, and price and trend kind of hold in and hold above there. Now we're going to do we have 2 webinars next week, but the level to watch for next week, because next week is February, right? So we've got a new valuary for the month. The level to watch not only is the 50-day moving average, but for me, it's definitely going to be 37.29. That's also where I want to see price get above. I don't want to see us, there's some ugly things down here. Now, also on the positive side, I would say that if you could be defensive and stay and understand that it's a bit of risk off underneath the 50-day moving average and everything else I talked about, I think that there will be some really good buying opportunities. My opinion, and I don't know this for sure, and I will let price and trend confirm that for me, but I think that this is a short-term issue going on. Don't forget, we had the Fed this week completely overshadowed, and the Fed indicated that they are really nothing changing from last month, right? They are still being supportive of the overall economy, because that's their job. Their job is not to be supportive of the equity market. By definition, it's to be supportive of the economy. And it really didn't sound like they are changing their tone, and that is a positive for the market, right? The fact that they are still inserting liquidity into the market, so that is a good thing. And I think that if these things, if there is more short-term volatility, you will start to see more things become attractive. Remember, it's a push and pull type mechanism, right? The market goes up, people take profits. The market goes down, things become more attractive, more appealing. There's more demand out there. People take advantage of that. All right. So keep these things in focus, right? That we can have short-term volatility, and you have to kind of see it through a bit. So really interesting performance, I would say. Medical devices, they outperformed today. Really some interesting stories there. Look at what Abbott's been doing. Abbott is generally a slow mover. Look at what they've done since earnings, right? There's a lot of hidden gems this week that kind of gotten overshadowed. Abbott's one of them. I think TMO reports next week. All right, we'll see how they do on earnings. All right, I didn't get to see how this name finished. Yeah, HOLX, right? Also post earnings, another medical device company. Not bad, up 5%. And here's what the medical device ETF looks like. It did not close as strong as a couple of those names, but it definitely tried to. So that'll be one to watch for next week. Is the medical device group showing some relative strength today? By the way, some of these things, and we've talked about these too in these videos. The metals and mining, right? Which everybody, we started to see a whole bunch of bullish notes about commodities and about some of these areas, which I was bullish too. But look at what's happened here, right? This originally I thought was going to be a bull flag. The bull flag broke, right? And I had a couple names in this group. I got out, right? I got out with So this is good. These are good things to talk about, right? So I was in SQM, and I decided to get out of it. I think here, and look at what I missed, right? So by being disciplined, I saved myself, and I was in a couple other material names too, and I took stops, right? I did what I was supposed to do, right? I set a stop and honored it, and I missed bigger downside, all right? And I'm not in a bad situation now, so I'll get to my performance for the month too. But you want to be very objective too. Same thing with the financials. Financials broke out. And my original thought was that this holds in here. But listen, this did not take place, and you have to make adjustments. Right? We did not. Did not hold here. Excuse me. I knew I was going to sneeze. So this is the analysis like that you want to incorporate in here. What names have really held up? I just went over medical devices while not blasting off to the upside. There seem to be a little bit healthier, right? Another name that I was watching today was CrowdStrike. CrowdStrike did okay today, up 1.5%. Am I convinced that this thing is going higher? Not yet. I think I'll be watching it, but I like that in a tough day, it recouped all those short-term moving averages and stayed above value. It looks like it's going to open up inside value. So at least if I wanted to take a shot in this, I know that my stop should be right around 207. All right, defining your trades on the entry, very important. All right, so this is completely crazy, and I don't know how long this continues. XRT, which represents a lot of those short interest names, finished up 6% for the day. Again, very, very odd, and just kind of gives you a sense of what is going on in this market, what is being targeted. So we'll have to see how that unfolds next week. One of the observations that I think Michael Santoli said on CNBC, but I wasn't listening to his every word, but I also agree with this. The short interest in names is a lot less than what it was a few weeks ago. There's really not a lot of names that have big high short interest anymore. That's why I also think that this issue is temporary, because after the short interest is gone, there's no more short squeezes. And I think that is, you know, getting close. Whether it's the beginning of next week, a week from now, I don't know the specific, but I would say that I would guess within the next week and a half, if this kind of momentum continues, there will not be many names with high short interest anymore. They'll all be covered, so no more short squeezes. Just a guess, and I'm not analyzing every single name, but I'm just talking about the overall short interest in the market. Okay, so here's the market performance for the month. Oh, sorry, no. This is for the week, right? So we just reviewed today's performance. This is for the week. SPY finished down 3.3%. Diamonds finished down 3.3%. IWM down 4.4%. So pretty nasty price action across the board, right? EEM down 4.5%. Bonds finished flat for the week. Not a major bid there. Again, story of the week, high short interest names in retail, and some other areas of the market. But XRT up 17% for the week. Next best sector was REITs and utilities, consumer staples, defensive areas of the market, right? Solar, clean energy, which have been very strong the few weeks. Clearly, there's some liquidation going on in this group. Again, what I've said earlier in the week is some forced liquidation could be buying opportunities. Just a matter of time before that actually materializes. All right, and I usually talk about the watch list trade at the end of the week. This was the worst week I've had for the watch list trade, so gave back a little bit of performance in that. Still, I think that trade is up about, let's see. Still up 42% from the month since August inception. I will be updating that going forward month to date rather than August. August is when I started the watch list, the weekly watch list trade. So that I gave back some profits. I will also report how it did for the month of January, and I'll do that probably in Monday's video, I guess. Or if not, I'll definitely talk about it in next Friday's video. But I'll be reporting like the year to date. Now that we're through a month, I will be reporting what the month did and what it did year to date 2021, because we are in a brand new year. Let me talk about performance of my trading account too. All right, so trading account for the year 2020, probably one of the last times you'll hear me mention 2020. Up 307%. My accountant, I did get the paperwork back from my accountant. They have verified that. I will be putting that on social media on either Saturday or Sunday. I've got haters on some haters on social media, so hopefully that'll satisfy them. You know who you are. But my accountant has gone, and it took them a few weeks, but they have verified that data for my brokerage accounts. So up 307%. Again, you'll see it posted on my Twitter handle at CFromhertz over this weekend. And for the month, I'll have to wait until Monday, because E-Trade, the brokerage system I use, takes a day to report it. My estimates, I'm up about 7% for January. So while I do not view that as great, for the month, S&P finished down, which is a shocker to me that the S&P finished down for the month. So I'm outperforming. Is it the best month? No. I could tell you, some of the things I did well versus some of the things that I did poorly. What weighs on me all the time is the things that I did poorly. But I had a pretty good feeling early on this week, and you could watch my Monday video. as well as I posted this on Monday, that I said I de-risked, right? I got out of a good portion of positions on Monday. However, I started to kind of scale back into a couple positions, thinking that, some names started to look good to me. I got chopped up, right? I had to a couple times got into a couple positions, had to take them off. I tried to trade less options, and I think, for me, when the market starts to move like this and the VIX gets above 30, I try to trade less and less options. It just becomes too difficult. The option prices are too expensive unless you're selling premium. If you're going outright long, that's an adjustment that you have to make, is that options are now more expensive than they were. So I really try to avoid short-term options. If I do take a shot on something with a short-term option, I'm always, you know, identify the risk that whatever I put into the option I could lose, because it's a short-term option. All right, they're the most sensitive options out there. Okay, so getting chopped up, I got chopped up this week. I was up a little bit more going into this week, but just too many things. I had to unwind too many positions, as the market was falling, right? Which is a bad position to kind of be in, um, you know, and also, trading just a little bit, too much size, and a couple volatile names. I put on too big of a position, right? Some of these names, they move very, very quickly, right? Especially when the market is falling. So that's a couple lessons for me, right? Doesn't matter what your level of trading is. You never get to the point where you figured it out, right? There's human error in everything, right? And to think that you're going to be perfect, is not realistic. It's just not, right? You cannot trade perfect. I cannot trade perfect. I made mistakes this month, but I'll tell you what, I'm okay. I did not make any mistakes to dig myself in a hole, right? I'm okay with the paper cut mistakes, right? And I had a lot of, I had some of those paper cut mistakes, right? Here's the blotter for, by the way, I like to show this so that transparent. Here are my trades today. I was able to take some targets in some things. I got long some Neo yesterday. I was long some Run, and then kind of the bottom, fell out of the market, and I unwound. I don't want to be in options once I start to see things move. I got out of Neo for just under my cost basis. I try to trade in IHI today, the medical devices, which I just mentioned strong. I got out of that, right? Right, so that's a loss. Right, so doing things like that, getting out of fast. I tried a little bit of Fastly. We've seen some call buyers in this one this week. Just did not work, and out for a small loss, right? And as I try to communicate as much as I can, everything for me today is a small order, just not risking much, just participating, right? Apple, I gave a little bit of a shot. So again, I'll take some shots at some things. They're just not going to be big positions. I traded a little bit of Apple stock. Apple, I saw a decent amount of call activity at the end of the day, and I do have a level to trade against, right? That's also above the 50-day moving average. I view this pullback as dramatic in Apple. Could it get more dramatic? Absolutely. So I'll have a stop price for this, which will be probably the 50-day moving average. All right. So that's, I think, to kind of conclude this video, is not the best month for me. Still up around 7%. I'll look to improve on that. And my overall cash position is high because of the things that I talked about earlier in this video, and I will look to attack this market when it starts to give me good signals, right? This is just the first month of the year. If you look at last year and what happened, I would not get down. Even if I did not have a positive month this month, if I was flat or down, I would not get discouraged, right? It is the first month of the year. This was an extremely tricky month, I thought. Sentiment has been high for months, right? So it's actually a little bit of a good thing for the weak hands to get shaken out of the market, and for this market to reset a little bit. I view that as something that had to happen one way or another. It was just a matter of time. So I think there will be some great trading opportunities. Again, give yourself a pat on the back for making it through this bizarre week, and relax a little bit this week, right? Do something away from the screens, away from social media. Go for a run. If you can't go for a run, go for a walk, put a mask on. If you like to have a couple drinks, so be it. I do. I'll be doing that. Guys, have a great weekend. And, if you like some of the things that I'm saying in these videos, I give a lot more analysis on the hop in the Tribeca Trade Group trading room. I can't say enough about Tribeca Trade Group members. I think everybody handled this situation with a lot of maturity and respect for one another. That is good trading, guys. So you did a phenomenal job this week. And as a team, we will continue to prosper together. Thank you very much. Thank you, Tribeca Trade Group members. You did a phenomenal job this week, and you set yourself up for really good things to come. Thanks, everybody.